financial advocate for the entrepreneur. So I'm so excited to welcome you out today. Excited to have you guys on the webinar. Excited to be able to give you lots of great value in a very short period of time. My goal here is to be able to give you as much value as you possibly can in about 40 minutes. Is that okay with everybody? Cool. So this is what I want to do. I want to be able to knock your socks off as quickly as possible. Like all of my webinars, I want to give you as much value as you can get, as much bang for your buck for the time that you invest. Because I know that any time you spend, when you watch these things, you want to make sure that they really do work, that they're real stuff. One thing I'm big about, I am not big about being fluffy. I'm not big about being like, Milli Vanilli. If you remember them. You remember them from the 90s, Milli Vanilli? So you remember them lip syncing and being totally fake, right? I don't want to do that to you guys at all. I want you guys to get real value. And so there will be no Milli Vanilli singing here. If there were, the whole webinar would sound like this. Okay, so seriously, let's get going. Let's talk about this because every time I get to this time of year, it's amazing how people get more worried about taxes. This is especially true if you're one, a person that's making more money this year, two, you're a business owner and you're kind of wondering, well, am I really doing this right? Am I really overpaying? Or three, maybe you're a business owner and you have an employee and you're making money together and you're just not sure how it all works together. And maybe you're just looking for a few quick tips to be able to free up some more money. One thing I'll guarantee, this happens all the time, is I will teach you probably more in these few minutes than you'll ever learn from your accountant, possibly over the last few years. Now, here's the big disclaimer. I am not an accountant. Okay, I'm not a CPA, I'm an accountant. I'm none of these things. So I want to be very clear that anything I'm talking about here are purely things that either one, I've implemented for myself, or two, things that I've seen our CPA have our clients do. So these are coming more from experiences. But understand that all these things should be consulted with a real tax professional. So, but like I said, most tax professionals, you try to get them on things like this, let's face it, they're kind of boring, right? They're pretty dry. They're not very good to listen to, and a lot of times you kind of just zone out everything they say because they start quoting off tax code. The good news is I know just enough to be dangerous, and so and I like to put things in very simple terms for people so that you can understand it. And so that's really what we talk about today. The reason I love talking about taxes is because as being a cash flow expert, I'm all about freeing up cash flow. See, when you free up more cash flow, you create more options. And when you create more options, a lot more freedom that happens as a result. Think about it in your life. If you had an extra $1,000 a month, heck, even an extra $500 a month in your life, would that make things a little bit easier? For those of you that are on this webinar live right now, go ahead and type in here, how do things feel when there's more cash coming in? Say you had an extra $500,000, maybe even $3,000 a month. How would you feel right now if you had that? What were some of the emotions or feelings you'd have? Go ahead and put that in the chat box right now. And by the way, the chat box right at the very bottom there. Okay, now I'm seeing you type here. Relief, absolutely. You know how many times I hear that? Just constantly. And Raquel's like, oh, LOL, the same, right? Exactly. It's a lot of relief. There's freedom, right? That's the whole point. This is why you don't need $1 million. You don't even need $2 or $3 or $5 million, like some people will teach you. You have financial advisors all the time telling you you've got to increase your net worth, and then there's freedom. There is no freedom with net worth. It's all about cash flow, all about that money coming in, right? And so now imagine the opposite side. Imagine if you didn't have that money. Imagine if you're losing an extra $1,000 to $2,000 a month. Now, how would that feel? Not very fun, right? Would you feel stressed? Some of you just thinking about it right now, you feel like your chest is tightening up. You're like, oof, I'm just getting tense or just restricted thinking of that and the things the things I wouldn't be able to do anymore. Denise says, oh yeah, right? Yeah, we don't want that. The sad thing is that Uncle Sam wants you, right? It's funny, I've never once seen an IRS agent go to one of my clients or anybody that I've known and said, you know what? We really feel you've been overpaying way too much tax. So instead, we just need you to, we want to give you your money back. Here you go. take it back. We don't want to take any of it. 'Cause, hey, we can't take that much money. We really can't use it. We're the U.S. government. Now you'll never hear that, right? Of course, they're never going to come to you and say, you know what, we're going to audit you because you paid too much in taxes. It's always about how you're going to pay them. I always laugh when we work on people's taxes. A lot of my clients that we've worked with, and it's funny to see how sometimes they'll end up, um, they'll come back and they'll say, wait, so they want a tax bill immediately. When we owe taxes, they want it that day. But when we ask for a return, it takes sometimes 3 or 4 months to get the money back. Isn't that crazy? And the answer is yes, it is. And because Uncle Sam wants you, this is why it's one of the biggest money leaks I find people have, especially if you're a prosperous business owner. And the thing is, we don't want you to be in that kind of situation. We want you guys to feel free. We want you guys to be free. We want you to be in a situation where there is more money every month. And imagine this. I mean, my average client saves between, and this is over 500 clients, right? They'll save at least 5,000 to 10,000 or more a year in taxes. Now understand, the average client I've worked with makes just barely over 6 figures, like right about a little over 100,000, right around $100,000. That's the average, right? At minimum, I usually see people will find, if they're at least profitable in business, we'll usually find at least $2,000 to $3,000 a year, piece of cake easily. Now, what if it were only $2,000 or $3,000 a year that you're saving? I mean, wouldn't that actually be a vacation? Wouldn't that be freedom in a lot of cases? That could be the difference between taking a vacation or not taking a vacation, which is a big, big difference. And the problem is that most people never have a clue that this is happening. Here's what's awesome. Here's the good news. By the way, the most I've ever seen somebody free up was over about a 3 to 5 year period, $220,000. $220,000. That's almost $250,000. Oh, and by the way, they had an accountant that they thought was perfect. They thought it was a good accountant. In fact, almost everybody I work with or that I've talked to believes their accountant's doing a good job. Now, if you dig in, a lot of them aren't sure and they question it. I just got a new client just yesterday, in fact, because they're pretty sure that their accountant's not doing a good job. And after hearing their stuff, I didn't have to look at a whole lot of numbers to find out, yeah, you guys are overpaying big time. This is especially true of people that if you're not only profitable in business, I see this especially true with people that are like network marketing leaders or people in direct sales. People that tend to be more self-employed or have, or more maybe their business is more just managing themselves, but they might manage a team of people or something like that. Very common. Very common among dentists. I worked with a lot of dentists and tons of money. Those are probably the biggest money leaks I've seen. I remember one guy that I worked with, he was a chiropractic coach, actually. I worked with a lot of chiropractors, and this guy, he actually, we amended his returns, and it freed up about $100,000 just in that year from money he was missing from his accountant. And even better yet, I even had one lady who had Mel Gibson's accountant, right? So the actor Mel Gibson had the same accountant as him. She says, I know for a fact that my accountant is awesome. And we found $120,000. So now those are more the extreme cases. Like I said, the average is at least $5,000 to $10,000 pretty easily. That's pretty easy to see when you're a profitable business owner. If you're not profitable, you might find a little bit, but not a ton. So usually you find more. Or if you're not a profitable business owner, but you have a spouse working outside the home, you'll find a lot of money there. Now, there's 3 perspectives you have to understand, and this will help you understand why accountants teach the way they teach or what they don't teach. There's 3 real perspectives here. Okay, the first one is that a lot of people come from a spender mentality. I would say about 40%, maybe 50% of people come from this mentality. The best way to know which mentality you come from is ask yourself, if I were given $100,000 today, what would I do with that money right now? In fact, those of you on this call, go ahead and type that in the chat here, or on this webinar. I guess we're not a call, video call, right? Just go ahead and type in the chat feature here. What would you do if you had $100,000? Denise says, pay off debt, then invest. Okay, we'll get into that perspective here pretty quick too. Awesome. Okay, what else? What are some things that you do? If you had $100,000 today show up, what would you do with that money? What some of the rest of you say? We got a few of you typing right now. Yeah. And by the way, for some of you, 100,000 may not be enough. You might have to think bigger, 250, 500,000, a million. Just depends. Some people, 100,000 is big, but that's usually a pretty easy number for most people that come on this kind of webinar. Start my kids' college fund, put some in savings, pay off debt. Awesome. So here's how to discern which perspective you come from of these three perspectives. Number one, if you're a spender, you'll typically talk about how you're going to finally use that money for freedom. So you might go and do a vacation. You might do something with the family. You might invest in a boat, or things like that. Now, understand that you could be doing the same actions in all three of these perspectives. It's more the why behind it that determines what perspective you come from. So spenders tend to think, well, I want to spend. And it's usually out of fear. It's usually something like, well, it needs to fulfill me, or I feel like, hey, I lived poor as a kid, so I'm going to actually live free as an adult, therefore I'm going to spend. Or some people will say, as a spender, they'll say, man, I'm so, I'm sick and tired of saving my money only to have it get used on things I don't want. So why not just spend on things I want right now and just use that? So there's all kinds of reasons why that would be the case. Savers, and then we're hearing some savers here and type in the chat feature. Savers will typically say, one, pay off debt, two, save money. Those are the two things they'll typically do. Pay off debt, save money. That's the first response they come to. Most financial people in the media will tell you to do that. They'll say, hey, here's how you're going to pay off your debt, save every money. In fact, you're going to save it for the long haul, save it for some time down the road, right? You might never ever see it. You might not live to see that money, but you'll have money, right? This is why net worth is so big. They all come from saver mentality. I would love to see somebody in the media at one point come from a spender mentality. Somebody that's a financial expert, right? Say, hey, you know what? You should blow it, right? Wouldn't that be funny? So no, we're not going to recommend that. And I'm not going to recommend the saver perspective either. And again, these could also vary. And then there's the steward perspective. A steward takes the best of the spender and the saver and puts it into one person. Now, if you tend to side more with the saver on that side of it, especially, if you're more of the saver, you'll probably want to become more like the spender, because spenders are willing to let money go. They're willing to use money, right? If you're a spender, you probably want to be a little bit more responsible and wise and think more about what you can do and plan a little bit. You don't have to be a whiz. That's the good news about this. Like everything I'm teaching here, you do not have to be a financial genius. Common sense can work here. But if you come in the middle, you say, what's the best use of my money to help multiply and expand and grow and make things better and more beautiful and just make everything improve and grow? That's the focus of a steward. And so you might focus on savings, but it might be for a stewardship perspective. You might say, well, I'm looking for these savings because I need an emergency fund, or I'm looking to do this because I need to save up for this. Usually a steward will save to then purchase something, to use the money. Stewards will use money. They won't just save it and store it like squirrels or chipmunks for the fall, right? Or hibernate for the winter. They don't do that. They're willing to let money flow in and out. It's always coming in and out. You want to be of that perspective, especially if you're a business owner. Even if you're not, this is still a very key perspective. But as a business owner, you've probably seen this work even more so. Because as a business owner, think, if you just save money and didn't spend anything, didn't invest in anything to improve and grow your business, how big is your business going to get? On the flip side, you see people that are spenders as entrepreneurs. They'll spend money like crazy. They buy what I call shelf help programs, because they're not self-help, because you put them up on a shelf after you learn them and never use them again. It's just you take them, put on a shelf, they collect dust, and they do you no good in your business. We don't want that. We want to be able to put things to use and make it better and grow. That is the purpose of what a steward does. Now understand, when you're looking from accountants, most accountants that are number crunchers, they focus on this narrow little vision of what taxes are. Now, this does not mean they're not good people. A lot of accountants I meet are very good-natured, very good people, and very honest people. The problem is they only see visions from like this perspective, and they're almost always a saver perspective. So they're going to be telling you to do things, things just really focus on numbers and that's good, and we don't mind that, but they don't see the big picture of what's happening. So a lot of times what happens is an accountant works independent of themselves, but they don't see everything that's going on in your financial life, and that could be the very thing that cripples you financially. So give you an example. A lot of accountants will tell you, go get an IRA. Now, here's the thing. If you're a business owner and they're telling you to go get an IRA, my recommendation is this. Fire them. Get rid of them. You do not want an accountant that's telling you to go buy IRAs when you're a business owner. Here's why. Ask yourself, what is an IRA really? First off, one, it is not a tax break. It gives you a temporary tax relief because it's just delaying your income to a future date. It's really just taking part of your income and moving it over to be taxed later. Here's the real question. Are taxes going up or down in the future? For those of you on this webinar, go ahead and type in the chat, what would be your guess? If you were a guessing person, do you believe that taxes will go up in the future or will they go down in the future? What do you guys think? Raquel says up. Denise also says up, right? So, and by the way, I get that answer every time from anybody. They believe it's going up. And by the way, even if taxes stay the same, here's the thing. Inflation alone, if you have to deal with inflation going up, we're already seeing this right now. The cost of food is going up like crazy right now. It's kind of nice to see a little bit of relief in the gas prices for a little bit before they go up again, right? But we're seeing this big jump up in food costs. We're always having to spend more money. But the mere fact that money is going up, the fact that you have to spend more every year or every so many years, just for that reason, you have to spend more and consume more. It means you have to pull out more money in the future. So if you have money in IRAs, guess what? Even if you stay in the same tax bracket, you'll have to consume more money, meaning that you're going to pay more in taxes. Now, I can't guarantee that, but the odds are pretty much, as Hunger Games say, in this case, the odds are not in your favor, right? So this is why this is such a big problem. And accountants know this, but here's why they do it. And I've talked to several of them, and here's what they say. They'll say, well, for IRAs, we do it because we always feel like we have to justify our job every single year. People are always questioning whether or not they should keep using us. So a lot of times if they say, well, we don't want to pay more tax, especially if they make more money, they'll say, well, you can either, one, go buy more business write-off type stuff, equipment or education or consulting or whatever it might be. Here's the thing. If you're doing that just to get a write-off, probably not worth it. Like, for example, when people do my program, because I do a lot of business consulting within that, it's a business write-off. I address personal finances too, but I'm addressing a lot of business stuff and how they flow together, how you get paid more at home. And so, yeah, we do that as a business write-off, which is why a lot of people towards the end of the year say, ooh, let's get that in fast so we can save tax and even get a write-off that actually produces real returns. But if you're just doing it for the sake of getting a write-off, like I had somebody purchase a vehicle. They didn't need a vehicle, and they went and purchased a vehicle because their accountant told them to. Not a good idea, because it doesn't do you any good to just consume. That's not good. And at the same time, it's not good to get an IRA either, or a 401k, because those things don't help you out. And even if it's a SEP IRA or a simple IRA or those kind of things, again, delaying something that's in the future, not only because of more taxes, but also that's taking money away from your business that you could be making money today. So why would we want to take that money and take it away from us right now, right? We don't want that. So I hope that I really drilled that point home, and why most accountants, really, as good-hearted as they are, they just don't get it. And because they only look at the numbers, they don't look at the bigger aspect of the business and how to make it work. Very, very few do. A lot of them come to ask me to have me send them referrals, and very few ever do get referrals because they have to have a steward perspective, not a saver perspective like most of them have. Does that make sense? So it's a big thing, especially when I'm looking out for you guys. It's a big, big deal. All right, so let's get some actual strategies here. Again, I'm not an accountant, but here's some common things that people miss. Number one, mileage and travel. Now, a lot of people understand that you should be writing off miles, but they don't necessarily track it. There's different ways of tracking your mileage. One, make sure that you have a Google Calendar or whatever you use for a calendaring system. You're actually putting in your schedule what you're doing and why you're traveling for what. So if anybody were to ask you, especially if this is a calendar system, you won't lose, right? If you happen to get audited by an IRS auditor, which, by the way, auditors, it's about a 1 in 200 chance that you're going to be audited this year. So very slim chance, but as Jim Carrey says in Dumb and Dumber, so you're saying there's a chance? Yes, there is. So here's the thing: is that it's a very small chance, but still, you want to make sure you cover your bases. So being able to track things on your calendar, is saying, hey, I went to do blank, or whatever it is in your calendar. Hopefully you schedule those things out, so that's very easy to justify. Secondly, you do want to track miles. Now, for me personally, my car is used almost exclusively for business miles. If I have to use anything from a personal standpoint, I'll typically use our wife's, I'll use our minivan, our family vehicle, right? I'll use that. Every once in a while, if I bring my kids on what I call a bizcation, then sometimes I will bring the van and I'll track those miles instead. But usually I'll track the non-business miles on my car that's mainly for business. I'll track the non-business miles, so I'll just subtract it at the end of the year. So be sure to do that. Now, what constitutes as business mileage? For example, even if you go to a job every day, you cannot write that off. But if you're doing something en route to your job, something that maybe is marketing, maybe you're dropping off a business card and pinning it up on a dry cleaner or a grocery store's cork board or something like that. Maybe you're doing something along the way. Maybe you're visiting a potential client or whatever it might be to and from. That can actually write off the round trip. Are you doing some of those things that help do business stuff along the way, even from there or back, right? So there's things that way you can do. Also, I mentioned bizcations. I love taking bizcations, as I call them. That's not an official accounting term. I call them bizcations because I like to do trips, and especially if I do a vacation with my family, I want to make sure I'm doing some business along the way. Here's the good news. You don't have to be a Nazi about doing business the whole time. You don't have to ignore your family. Here's the thing. If you spend at least more than half of your days of that vacation doing some form of business at some point during those days, that can constitute writing off everything from travel, food, lodging, you name it, entertainment, all those things. So sometimes people will say, well, I just had somebody email me last week. They said, hey, so Chris, can I write off Disneyland? I said, it depends. If you're going to Disneyland for a few reasons. One, you're going down there and you're meeting different people. Maybe you got some potential clients. Maybe you do have clients down in California. Maybe you got some maybe you got some people that you say we could try to meet up at Disneyland, get our families together, pay your way in, and that's a write-off as well. Or you might even look at Disneyland and say, I'm looking to improve my business. I want to improve my marketing. I want to improve the experience I give to my clients or to my customers. How can I do that? Well, who better to learn from than Disneyland, where they're all about creating that experience. So why not go there, take even a notepad with you as you're waiting in line for rides and stuff, and just kind of note, hey, what are some things I'm noticing here that'd be really good? What's the music they're using? What are some smells and foods I'm smelling that creates an experience that's there? What are the sounds and the sights and everything you're seeing? What do they do in their stores? How do they cross-sell? All that kind of stuff. You can study Disneyland, have a lot of fun for your kids or grandkids, and write the whole thing off. Again, talk to an accountant to make sure, but that's one thing I like to do. And again, if you want to make sure that you're doing it more than half the days as having some aspect of business during that day, even if it's just a few minutes. So if you have a 7-day vacation, it means you need to spend at least 4 days where there's some business, and you got 3 days where you do no business at all, and the whole trip's a write-off. Is that cool or what? So that's number one right there. Number two, having a corporation. Now, the type of corporation just depends. Here's a big key point with corporations. Do not have your accountant set up your corporation. By having them doing so, that is practicing law without a license. They cannot set up your corporation and not be very, very liable, especially if they don't do it right. They are not attorneys. Attorneys can set it up. You can set it up yourself. You gamble when you do it yourself, but at least you could go and register the states, whatever state you're in, and do it that way. But you do not have an accountant set up your corporation. That is not a good idea. But you do want to have a good attorney or do it in a very efficient way. I prefer to have an attorney do it, even if I have to spend a few $100 to do it. Doing it right the first time is way better than doing it wrong. And like one of the guys on my team had an exposure, he had an exposure to that by not having that protection in place. He actually was sued about $500,000 and ended up having to file for bankruptcy with a business that was going viral. It was a huge business, but because of the lawsuit, he had to shut and close his doors. Horrible thing. We don't want to have that happen. That's just from a liability perspective. From a tax perspective, there's some cool things. I'll tell you, the year that I set up my corporation, my first corporation, even though I made double the money, I paid half the taxes of the previous year. So it's almost like I saved 75% of taxes just by having a corporation and knowing what to write off in there. Huge deal. Now, there's a lot of myths around this. I hear people come back and say, their accountant will say, well, they said unless I'm making, somebody just told me last week, they said if they're making $15,000 or almost $20,000 a month, then set up a corporation. Wrong. Not even close to the truth. I've actually had my accountants run numbers, and as long as you're making at least a profit of $10,000 a year or more, so basically if you're profiting at least 5 figures, it's probably worth the cost having it in place. Not to mention the legal protection too, right? So it's a big, big deal. And so here's why this is the case. Now there's LLCs, and this is typically the two that you're going to run into. You have an LLC, you can have an S corporation. Usually you won't use a C corporation unless you're planning to sell off shares or go public with your company and make it really big. Maybe that makes sense. Most cases, if you're a small business and you're looking to be small, and maybe you're going to sell it, but maybe it's not going to be like on the stock market exchange, right? An S corporation could be a good idea. LLCs aren't bad. The problem with LLCs, though, is that you get the full tax brunt just like you do without a business. You get a few other benefits, but LLCs are mostly for holding things like real estate in or assets, so equipment or something like that. Something that's physical or tangible you'll usually put into an LLC. Now you might start with an LLC and then get taxed like an S corp. And here's why an accountant might want to do that. And some of you might already have this, but I've still found money that's being ignored in this place. So an S corporation, what it allows you to do is this. You get to work as the employee and the employer or the business owner. You get paid two ways. When you get paid as the employee, you get paid a wage. Now you pay all your own tax on that. You pay your own income tax, right? Just like you do normally working a job. But the one thing you do that's a little bit different than a job is that you pay Social Security tax. A lot of people around here talk about FICA FUTA, right? You pay Social Security tax. For right now, currently, when this is being recorded, that's 15.3%. Now normally as an employee, you pay 7.65 and your employer pays the other half. But if you are the employer, if you have your own LLC, for example, your own business, you pay not only income tax, you pay 15.3% of Social Security tax, which for people that are my age or almost 40, that's probably not going to be something we're going to enjoy a whole lot of in the future, right? So it's not something you're really excited to pay into if you don't have to. So that's the problem. This is why people will start making it to 6 figures and say, I feel like half my money is going to taxes. The reason is because it is. So an S corporation, here's what it allows you to do. Whatever you pay your wage on, whatever is a reasonable wage for your employee type activities in your own business, when you're working in your business, right? That wage does have that 15.3%. But if you pay yourself dividends or profits or draws as a business owner from your business, for that, there is no 15.3%. So say, for example, you make $100,000 a year. This is like your $100,000 profit. If you had a wage of $50,000 a year, and then you took owner draws or dividends of $50,000 a year, $50,000 that is not paying 15% of taxes, meaning you save over $7,600 in taxes just by having a different corporate structure, just in that situation. Some cases we've seen IRS auditors be okay with lower wages than that, even lower than 50%. And there's a whole discussion on that of what's appropriate wage. The answer is it just depends on your business and who you are and what you're doing in that business. I've seen people go as low as like 30% and be okay in an audit. That doesn't mean you should. I just want to be clear. That's because as their employee type role in their business versus working on the business as the business owner, very different things. Especially with network marketers, this is big because a lot of times you don't work in the business selling your product as much. You're working on building the team and marketing and the whole leadership aspect of the organization, not so much just your employee type role in that. So there's a lot of flexibility there for sure if you can justify it right. Again, there has to be justification of appropriate wage for what you do, and then everything else on top of that, you can save that 15.3% tax. This is the big one. This is one of the big reasons why I save so much money that first year of having a business. This is also a big reason why I've seen a lot of my own clients, hundreds of them, even some of them that have the right corporation in place, just not taking enough because their accountant doesn't want to, they're afraid of crossing the line. And what that really is code for, it means they don't know where the line is. So they say, well, I don't know where the line is. I'm kind of blind. I'm not really knowing the tax code. So I'm just going to stand really far back from it and just be conservative and safe. Listen, I like conservative values. I do not like accountants that call themselves conservative because there's no such thing. It's, for the most part, tax code is pretty black or white. There are some gray areas, but to say like I'm being conservative, just it really admits that they don't know the reality is, so they just step far away from wherever the line might be just to be safe. Does that make sense? This is a big one. This costs people a lot of money. I hope you realize this. I've had people where they just switched it. This is where a lot of that 10,000 or 5 to 10,000 will come from, is right here. Here's another one that's a big one. This third one here is about hiring your kids. And yes, Denise, that could also possibly be including grandkids, because I know that might be a question that comes out of your mouth, knowing you. Hiring your children. Now, this is usually people that are, those that are usually somehow they're dependent upon you somehow. Especially if you claim them on taxes, this is a big thing. There's been debate over this, but here's the understanding. And I've heard this from multiple accountants. I've only had one accountant that's come, or one client came back with accountant's feedback saying, you still pay tax, which is not, I've not seen that yet. And I've seen multiple accountants do this very method. When you hire children, when they're under the age of 18, or if they're minors, they're living in a home, they're dependents, right? Normally, you're paying for kids' expenses. These are my 5 kids you're seeing right here, all hanging on me. The beautiful benefit of being a business owner, and especially working from home, is that you get to be with your family. The negative of being in your home is that you have your family hanging all over you like this when you're trying to work sometimes, right? And so sometimes it's just good to put them to work. And so one thing you can do is you can actually hire them for certain jobs. You can hire them for certain roles as contractors. And as long as you don't pay them, as of currently, when this is being recorded, you don't pay them over about $5,950 a year, they pay no tax, and you get a write-off. So you're writing off in the business. This works if you have a corporation, right? Sometimes even if you don't, there are some things you can do. Again, talk to an accountant about these differences here. There's ways to do this in different ways. But you hire these kids, you pay them, you get a write-off in the business, and they don't pay taxes up to $5,950 that year. Now, if you go above it, yeah, they'll start paying a little bit above that. So just know that $5,950 is 0%. You get above that, you're into like the 10% bracket and so on, right? You get into that part, yeah, you're going to be paying taxes, but it might still be less than what you're paying yourself. So paying yourself might save money. Here's what I love, because I had one client here. She's in a network marketing company, direct sales company. She has 6 kids, one more than me. So with these 6 kids, you can imagine she could put these guys to work and get some good money working. She's like, wait a minute, Chris, are you saying, and she actually learned this last year, she's like, are you telling me that I could basically be paying my kids probably pretty close to $35,000 potentially and getting a write-off? I said, yes. And that could be also considered tax-free type income in your family. That could be used for building up a college savings fund, like Raquel had mentioned earlier, right? It could be used for that. It could be used for expenses you're normally paying for kids anyways, like school activities, extracurricular activities, hobbies. This could be things with vacations or whatever it might be, or just savings in general for life things that you want them to do. But now instead of, and yes, this is each child, $5,950 per child. So that's why with this one person has 6 kids, she's saying, oh my goodness, this one thing alone is huge for me. And we're actually proving that to be true. I just sent her to her, she's a client now, sent her to my CPA, and he said, well, easily, and he didn't even know about the kid thing. I told him that later. He said, easily, we'll save her between $10,000, $13,000, just from what I can see. He's like, I bet you if I talk to her more, we'll find more. Denise like, wow, I have 20. Yeah, with grandkids, that's true. Now, grandkids, you do have to be careful. There does have to be a line there, and I'm not going to get all the details here. Again, talk to an accountant about this. But you can't pay them. Big key with this, too. A lot of people say, well, Chris, how do I pay them, or what do I pay them for, and what's the age? Do I have to, is there a certain age minimum they have to be? The answer is no. There is no age minimum. This is the coolest thing ever. This is one thing that most accountants don't teach, right? A lot of them will say, well, once they turn 8 or 9, maybe you can hire them. That is not true. Now, that's true depending on the job that you give them, but think about this. Do you know kids, or even babies, that are paid, even if they're paid in behalf of the parents? Do you know of kids that get paid for certain jobs or activities? For example, could you use babies, or could you use toddlers as child models? Could you use them as actors in your video? Could you use them as models and photographs and things you use in your marketing? Could you have them do that? The answer is yes. What's the wage? Whatever's a fair wage in your area, in your state, based on that job. So you can a lot of times just Google, average wage for a child actor in New Jersey, right? And you might do that. There might be something there you can pull up and find out what a decent, good wage is, or child model or something like that, or baby model. Do those kind of things. My own personal life just happened this year. I had 3 of my children, the middle 3 actually. The middle 3 were hired in a bubble commercial. They were asked to play in a playground for 2 hours playing with bubbles. They got paid $12 an hour. So obviously, and I know that they were probably being paid low. I think in Utah it's even higher than that you could be paying a kid for. So yeah, could I do that? Could I be filming videos and stuff and put my kids in it and pay them for the time? Yes, you could. I've got another friend where they actually will hire their kid to do video editing. He's only 10 years old or 11 years old, I think he is. Does video editing for him. Great. I have another friend. She hires her kid to download music on iTunes, like new music to come out that she can use at her events. She downloads the music for her. Half the time it's just music she wants to listen to, but it's music that they use at the events. And I always talk about it every time I go to events. I'm like, oh, your daughter downloaded another song, didn't she? Or a new song here. I love this song. So all kinds of ways you can pay them. Yes, you can pay them to take out the trash. I paid kids to do mailers and things like that. Anything that you want. Hand out flyers, work a booth, whatever. You can hire them to do all kinds of things. So for a lot of you, this one could be big as well. In fact, I would guess that between mileage and travel, set up a corporation, and even hiring kids, if you've even just one of these things will save you at least a few thousand a year. Okay, I know we're getting short on time. Can I give you one more bonus? Would that be okay? One more tip. This would be a quick tip too. But this one will save my average client who's profitable. This is a key with a profitable client. Saves them between $3,000 and $6,000 a year, depending on their tax bracket. Sometimes more. And what it is if you're using a home office, kind of like I am right now, one thing you do is you can pay the use of your living space. Much like you would pay for a hotel room, you could do the same thing. Have your corporation, your company, pay you personally. They pay you for the use of your space. Now, you might use that for one day, a day here or there. The key is, as long as you don't go over 14 days, if you go over 14 days, if you get paid for the use of your space for over 14 days, your property becomes a rental property. Now, you might still save tax there paying yourself that money. You might save a little bit in the real estate income tax versus just normal income tax. But if you don't go over 14 days, you're paying yourself for the use of that space. That's tax deductible, and you do not pay taxes on the income. So, for example, Marriott nationwide, if you look around, Marriott, a reasonable fee for a day use fee is about $1,250, according to one of my CPAs. Well, that's $1,250, and say you only pay for 12 days over the course of this year. Maybe it averages like 1 day a month. That's it. $1,250 times 12 days, that's $15,000 a year that is a write-off in your business, and it comes as income to you that you do not pay taxes on. That is how you would save between about $3,000 and $6,000 a year. Now, how many of you guys think that's pretty darn cool? It's pretty awesome, isn't it? Way cool. Yeah, I agree to these. Awesome. So this one's been big for a lot of my clients. In fact, almost every client I've had has not even known about this strategy unless I told them about it. And so big, big, big deal. And the thing is, it's been around for about 2 years now. But this is why it pays to have a CPA or an accountant that knows the codes. And yes, there is actual tax code that I've seen on this. So it is legit. But again, like I said, this is not advice that I'm giving you. These are just ways to free up cash. You got to have a real professional, an accountant or CPA, help you with this. Here's the guarantee, though. As most people, to be honestly perfectly blunt, most people will take this information and do very little. Some might actually ask their accountant about it, but here's what's going to happen. You're probably going to run into some situations. The problem is I see people year after year overpaying again and again. You do not want that. I can't believe that some people say, these are good tips, Chris. I should do this sometime. And then a year goes by and they do nothing. And then another year goes by and they do nothing. I've seen some people go by for years and do nothing. And I think, how many tens of thousands of dollars, if hundreds of thousands of dollars maybe, you've overpaid? I know of one dentist actually that's now gone about 20 years without even having a corporation in place. Now, dentists make easily a personal income in a couple $100,000 or more a year range. Imagine just how much tax that he's paying extra above and beyond what he should be because the accountant says he doesn't make enough. That's crazy. Or an accountant will say, you can't do that corporate rent thing with your house. I've never heard of that, or I don't think you can. I had one accountant that somebody asked him about it. Somebody who heard me talk, they asked him there with me there, said, can you do that? And he said, no, you can't. And they said, well, maybe. I don't know. I'll have to think about that one. I'm not sure if you can, but I guess it's possible, but I really don't know. That kind of stuff right there is what's cost you huge money. If they're throwing you in IRAs, it's costing you huge money. If they're doing this and that, it's costing you huge money. Sometimes in taxes, sometimes in lost opportunity costs because you're locking money away in things that you don't need. And remember, like I said, even if it's just $3,000 a year, if that's all you free up, that's all you save. That's the difference between having a nice vacation and having nothing at all and working your tail off, being trapped as a slave to your own business. I mean, even $3,000 a year, 30 years, that's 100 grand. If it's 10,000 a year, like a lot of my clients, 10 years, that's 100 grand. If heck, that's in 20 or 30 years, that's a $250,000. Not to mention the money you could have made with that money had you saved it in the first place. And so you need more than just an accountant. You can't have the guy that's just narrowly looking at just the numbers, or worse yet, he's a passive accountant where he just takes your numbers, puts them in a little program, and spits them back out. Like it always pains me when I hear about people that make good money and they pay all that money in, and they're paying for this accountant to basically only spit out numbers once a year, teaching them nothing about what they can do other than, well, you might want to buy an IRA, or you might want to buy something in your business right before the end of the year. Don't do that. You need a lot more than just an accountant because they're just going to be narrowly focused. Even the good ones are still going to be focused on just the tax numbers. You need a team. You need like your team of superheroes, right? You need a team of people that are working together. I like to think of myself as Mr. Fury. I'm the guy that kind of brings that team together because, like I mentioned, you don't want to have an accountant set up a corporation. You need an attorney to do that, an attorney that understands the tax benefits of these corporations to then work with an accountant. Do you know that attorneys and accountants fight like cats and dogs? They do not agree. Some of you have probably already experienced this. They have very differing opinions and they don't like each other a lot of times. And you'll either go with the person that either is more convincing or the one that you trust the most. And the problem is that can be costing you thousands and thousands of dollars every year because they're not working together harmoniously. What's really cooler is sometimes you don't always want to save a lot of tax. You don't always want to reduce your income to be nothing. I've had some people where we want to qualify for a mortgage. And so we actually try to show them save a lot on tax, but show more income. And I had one client right now where we actually were able to show about a $75,000 difference of higher income. Their accountant was showing them making negative $21,000 a year. They were losing $21,000 a year on their income taxes, according to this accountant. My CPA says, listen, we can change this by $76,000, about $75,000 a year, and you'll pay no more tax. But the difference is, because we're trying to qualify for a mortgage, we needed that. So we even show them, figuring out how we can make it show about $100,000 more a year, and and make sure that's reporting correctly. Did an amendment with the IRS, they're paying the extra tax, and now trying to do a refinance that can free up hopefully at least $700 to $1,000 a month, which is a big deal. I see accountants don't see that; they're just looking at the numbers. We're looking at the big picture, how everything's working together. They got to flow together. And so when you have like an accountant, an attorney, and then you've got a mortgage guy, and then I even had a health insurance guy working together all in the same case to make sure they're not paying extra on their insurance, health insurance with the higher income and things like that. I mean, the cool thing is that we're able to save them a lot of money just by doing that. So yes, thank you, Denise. I agree that my team is rock solid. This is why I have a team. This is why I'm not the know-it-all, but I do know a lot about different areas. I like to see the big picture and how it all works together. Standing above with you as your advocate, making sure that everything's working right. Taxes is a big key piece, and so often, especially right now, I've seen people over and over overpay on taxes more than they should. You like to look at it this way? Having a great team is like Reese's peanut butter cups. You have chocolate's awesome, peanut butter's awesome, but when you put them together, it's so good, isn't it? So anyways, that's what I like to see. I like to see that all work together. So here's what I'm going to ask you guys to do. One, I don't want you to pay more in tax. You can take this information, try to take it to your accountant. You might free up a little bit of money, and if you do, awesome. Great. Send me some kudos. Let me know if it works. For other of you, you probably realize that your accountant's going to get defensive. You're going to realize that your accountant's going to say, well, I don't know if you can do that, and they're fearing that they're going to lose your business to somebody else. Here's what I recommend. I recommend that you really question whether you're getting the best advice. Do you know for a fact that you're not overpaying on taxes? Even if you think you're good. And by the way, the ones that are most adamant about saying that they don't overpay are the very ones that we tend to find the most money for. Because ignorance is way more expensive than education. Not knowing what you don't know is what's killing you. And so the thing I'm going to ask you to do is, if you want, normally I do an evaluation. We have an evaluation with my team that says, let's look at everything. That evaluation is $297. However, we're looking to see the most qualified people we can help right off the bat before the end of the year, before you end up overpaying on taxes, because you guys get going right now on fixing your taxes. If you guys set up a corporation, that could take a few weeks, sometimes months if you're in different states. So we got to get going right now. So I want you to email Jeremiah Burns. He's my main consultant. He is my pit bull. The first 10 people that email him, we will do a money leak evaluation at no charge. After 10, then it's going to end up being $297 to do that. Still well worth $297. But if you do email jeremiah@moneyripples.com and just put in the subject line tax webinar, you put in that subject line and say, hey, Jeremiah, am I in the top 10? Like, I want to meet with you. I want to find out if we're overpaying, what's on, and even in other areas too. Are you paying too much in debt? Is there money that's leaking out that you didn't realize? Is there more money you could be making in your businesses or in your life? You should be making more money with your savings. And if you got like IRAs and 401ks, you're saying, ew, this might stink. You probably want to have that looked at too. And so he'll do a full money leak evaluation to see where that's happening. And so first 10 do that. And really, if you're a good fit, we're really only looking for about 4 or 5 people for the end of the year that will have the best. And when you do so, you get access to my entire team, including my CPA, attorney, everybody, working together cohesively. It's freaking awesome. And Denise, yes, thank you so much. I appreciate that. Denise has been one of our clients, and yeah, definitely I've seen that be true too. Lots of that small investment puts a huge, big difference in life. In fact, I'll leave you this one quote. This one quote is from W. Clement Stone. He says, small doors swing on little hinges. Sometimes the little things that we do can make a huge, huge difference. Small and simple things can bring great things to pass. Will you let a small little thing make a great pain or make it a great reward? And that's the big question. So anyways, appreciate your guys' time. Hope this was great and valuable for you. Share this with people, especially if you're on this. I would love to have you share it. I'm going to be having this post on YouTube for a certain period of time, so you have access to that. You can watch it again. So if you have a spouse that missed it, don't worry, you'll actually get the link as well. So be watched for that. I'll be posting that on Facebook. Anyways, guys, thank you so much for your time. You have a wonderful, wonderful, prosperous week, and hopefully prosperous end of the year too. Talk to you later.